Hello, good morning, everybody. Thank you all very much for registering for today's webinar. It's all about cutting costs and maximising insurance coverage in a changing market. Fantastic. That was a very positive sounding sound there. I think that's Michael Flynn from Howden arriving. Thank you for joining us, Michael. I think we can start now. We can't see you yet. Hopefully you can hear us, and we are ready to get going.
Oh, good.
Brilliant. So I've done my little introduction. So I'm just going to dive straight in and ask you, Michael Flynn from Howden, to introduce yourself, and then we'll get going with the content of the webinar.
Great. Thanks, Jane. So I'm Michael Flynn, Client Director with Howden Insurance Brokers. Currently, my remit is hospitality in the UK and Ireland. So we look after a lot of hotels from all areas of the business, including operators, asset managers, M&A. I suppose Howden over the last couple of years has grown quite a bit. We're one of the top 10 global insurance brokers now. We're in about 100 different countries with physical locations and more, including a couple of network partners. So that's a bit about us.
And everyone's seen your branding on all the rugby, the Lions tour, and everywhere you look at the moment, there seems to be lots of Howden branding, which is brilliant.
You
In
know,
the description,
we're trying to differentiate ourselves from the other Howden. So the more branding we get out at the moment, the better.
so no one's trying to buy a kitchen from you. Um,
Absolutely.
In the description of this webinar, we said that the hospitality industry is facing ever-evolving risks, but with soft market conditions, there are real opportunities to cut costs and widen insurance coverage. Can you expand on this and explain a little bit what you mean by that, and advise our listeners on what they could be doing right now?
Yeah, absolutely. And this will resonate with the insurance buyers in the audience. So for all the accountants who have insurance responsibilities, and also the insurance managers as well, including captives. So for probably the last 10, 15 minutes or 15 years, we've been in what we call a hard market cycle. So the insurance market, like any other, I suppose, product or commodity, is cyclical, and we go through periods of sometimes it's over a decade where the market will be either hard or soft. And what hard means is there's less competition. We tend to see compounded rate increase year on year between 5 and 10%, and it's a more challenging insurance climate. A soft market, we've got more new entrants because it's profitable to insurers and attractive to those new players who then drive down the pricing via competition. So as I say, the insurance buyers in the audience will know that there's been rate increase. It feels like it's been going on forever, 10, 15 years. The only way to really keep the insurance market pricing down has been to go through quite intense marketing exercises every couple of years. This is the first year in a very long time that the market's actually been soft. So what does that actually mean? That means that from a casualty perspective, so that would be employers' liability premiums, public and products liability, including obviously F&B. We're seeing probably about a 10% drop on casualty, and more aggressive pricing on property and business interruption. So obviously subject to claims experience, seeing probably between 10 and 20% advantage there, unless you've got an extremely good claims experience. And then there's obviously an opportunity to do more, particularly if it hasn't been looked at in a long time. So that's why we just thought, it's a very good year to put it on the radar, particularly of our own clients, but also of the wider market. Because insurance, although it's a massive overhead, it's not generally, a lot of the time it's last on the agenda. And we don't know how long the soft market conditions are going to last. Nobody's got a crystal ball, but we're hoping it's going to be around a couple of years. But certainly the next year or two is a great opportunity to hedge your pricing, particularly if you can lock into longer deals.
So now's the time to shop around. And is that
So
true for global companies as well as UK companies? Is it better for one or the other, or is it just across the board?
it's across the board. It's so we would say retail insurance, whereby if, for example, if you've got a portfolio of 50 hotels in UK and Europe, and you buy your insurance directly from an insurance broker, that's retail. If you're a larger hotel operation and you have a captive insurance arrangement, it also applies to the captive world. So, basically you are becoming your own insurer and having access to the markets that an insurance company would have, the reinsurers. So it's across that piece as well. Now, what we're not sure of is how the harsh. So we've obviously seen some major catastrophic events worldwide, particularly those in America and California. Um, they haven't had as big an impact in the insurance sector as we all thought initially they would have had, because effectively, quite a few insurers, actually withdrew cover in those areas because they highlighted areas of concern before the wildfires and before any of the storms in Florida. But there is still a massive exposure there. So sometimes it can take a time lag of 2 or 3 years for that to be felt by the retail markets. So the immediate effect is obviously the insurers on cover there. Primarily, there's 3 or 4 large American companies. All of those companies would be well known to most of the insurance buyers on this call. So immediate effect to them, but with reinsurance markets in the background, effectively everybody's involved at some level somewhere. So as I say, soft market conditions are here now, and there are external factors that can impact that. But we think the soft market will be here next year as well.
And should hospitality businesses be benchmarking themselves against one another? And how would they do that? How would they compare their insurance program against their peers?
I think it's just have an open chat with your own insurance broker is the first port of call. Instead of taking control of the marketing, actually just ask, what's the proper way for me to benchmark my program. There's a couple of different types. There is, a straight out broker review where you nominate 1, 2, 3 brokers to go into the market to try and get the best possible quote. That is, that's probably more of an SME option where you're a smaller business. With larger risks, it's better that you do a conceptual broker tender, in order for that broker to be able to take your risk to market in a proper way. And the reason why we say that is because a lot of the time the underwriters are looking at the same risk. So you're seeing it from multiple brokers, but different stories. You don't always get the best possible result. But if you work with your own broker and maybe one other and build a story, because at the end of the day, the underwriter, you're dealing with human beings at the moment. We haven't replaced underwriters with AI yet. Whilst they're humans, they're all seeing the same risk. They all want to hear the story. Maybe there was a large claim last year, but there's a bit of a background why that happened and what risk mitigation factors we put in place so that wouldn't happen again. And by explaining the narrative around the policyholder's approach to risk, that broker is better able to negotiate premiums, because premiums aren't all about claims out, premium in. Sometimes it's about comfort and feeling and planning for future as well, because there's changes in legislation all the time, risk management changes all the time, and if you don't have everything in place right now, but there's a story to get it in place at some point in the future, that's whereby if you keep it narrow with 1 or 2 brokers, that story comes across better and you get better return in respect to premium and pricing.
Okay, interesting. I'm sure that's very useful advice for everybody if they are responsible for this area of their business. We also said we would discuss Martyn's Law. That's its common name, Terrorism Protection of Premises Act 2025. In my mind, typically the very large businesses have been working on this for some time. That's very anecdotal. I'm not sure that the smaller venues are as aware of what they should be doing and how it might affect them. I think I've got a quick poll set up here, so I will just set that going now. If everyone could just have a quick answer of that, that would be very useful. Just so that we can see where people are with Martyn's Law and what we can be doing with it. So I'm going to just end that poll. We've got quite a few answers on that, and hopefully now that should be seeing on the screen that everyone's still got some work to do. That's pretty comprehensive. Everyone's still got some work to do there. So Michael, Mick, could you please talk a little bit about Martyn's Law and just generally about the Terrorism Act altogether and what people should be doing?
Yeah, exactly. No problem. So historically, Martyn's Law and the approach to terror in the UK, if you're an operator, so it doesn't matter what type of business you are. You could be an operator, be a hotelier, restaurant operator, retail. It didn't really matter. The approach to risk has always been property led. So in the event of, so we saw about 10 years ago the events in Borough Market. It was quite poignant because that was the first case where we brought in non-damage denial of access, whereby effectively the market was closed initially for 3 days and then reopened, and then it was closed again for another, I think it was 6 or 7 days, to allow ballistics to go in to have a look. So that obviously had a business interruption impact on all of those operators. But from a liability perspective, because the state assumes so much responsibility for the protection of the public, that it wasn't as much a concern for the operators. Where that's changed is whereby larger operators would have always had an excellent duty of care towards their customers, but now there's more of a statutory business case for protecting those customers, and there's two areas that we really want to address. It's just, if you haven't had a moment already, it's always a good idea just to jump onto gov.co.uk. There's an excellent fact sheet, and although government documents sometimes can be a bit wordy and a bit overwhelming, the government fact sheet, which we can post on the link after this, is excellent, and it explains the two-tier stage approach to Martyn's Law, whereby we're now talking about not property, but actually the protection of and the security of guests. And there's two areas in particular. Tier 1 is where you would expect at least 200 individuals to be present at an event, and the second tier is where you have 800 people at an event. So there's different criteria that applies to both. I don't need to go into a huge amount of detail today because all of the information is available. But effectively, there's a higher level of reporting obligation to the Security Industry Authority, the SIA. So if you have a certain amount of individuals, you'll have to comply with certain responsibilities. And so from an insurance perspective, what happens if you don't? What happens if you do? So terrorism is actually capped in most insurance programs at 2 million quid. And it's quite misleading because when we produce confirmation of insurance letters as a sector, the top line, public liability, injury to people, injury to third parties, is 25 million quid. However, the small print in an insurance company's wording will often have caps on liability, and one is certainly around the terror. So those insurance companies will actually look to cap their liability limit. Sometimes it's 2 or 5 million. So if you're buying a much higher limit, or you're buying excess layers, you might not realize that your liability in respect of terrorism has been capped at a lower limit. So first of all, I'd point everyone's attention to that. I think it's quite important to know exactly how much you're covered for. And also, the second part is just risk assessments. So if you've got any advice or any queries beyond the information available on gov.co.uk, reach out to your insurance broker, because we've got a huge amount of information, and we can also sometimes help with risk assessments for those policyholders where it's new, it's their first time, and they just need a bit of hand holding. And most brokers will have the same information.
Yes, I think there's a lot of fear in everybody that they feel they're fully insured, and then when something actually happens, they think, "Oh, I hope there's no clause in there that that prevents this from being paid out for whatever reason." So, I guess that's where you have to have that really relationship of trust with your insurance broker, so that they can point that sort of thing out to you. Yeah, I think Martyn's Law will probably come up again. I just don't think it's been embraced by probably as many people as it should have been. Just remind us for
No,
everyone listening.
probably not, Jane, because like at the end of the day, the main point about Martyn's Law is that the responsibility, the duty of care, has shifted away from the government to the operator on the premises. So
Mm,
once the operator realizes that it is their responsibility, they have statutory responsibilities, but also, a direct liability as well, on the business, on the stakeholders, on the directors and officers. That's the main challenge, and then all the information after that will flow easy, because that's normally the prompt for someone to actually just read a fact sheet or get a bit more information.
cool. Are there other risks that you suspect might be missed by hospitality industry? And are risk assessments, you mentioned risk assessments there, are they being carried out fully and effectively? Are all the necessary safeguarding measures in place? Is there other things that you would like to just alert our listeners to, if there's anything that you think they might be missing? And if I can just remind people in the audience as well, if you've got any questions, please do pop them in. That would be great. Thank you. But yeah, over to you, Mick.
Yeah, well, there's two main ones, and the first one probably the whole audience do already. So in terms of rebuild cost assessments, so one of the biggest gaps in cover that you will ever have is for what we call average. And that's basically if you've got a building that's worth 10 million, and you've declared 5 million to your insurance company, in the event of a fire or whatever, the insurance company's not going to pay five. They'll actually pay two and a half. So you've got a £10 million asset, but you're being paid two and a half. And the reason for that is average is the condition of average, which is hundreds of years old, is just fair. It's there to protect the common pool for those who underdeclare values to get cheaper premiums. And sometimes that can happen completely accidentally because you haven't looked at your valuation in years. So the first point is just keep an eye on average, because again, it's basically writing down any losses by the same proportion that you underinsured. So if you're 50% down on your values, you're going to get 50% less of your claim. And that is to protect the greater public who pay the correct premiums into that pool to get the right amount of cover. So the first thing I would say is be careful of average. In terms of rebuild cost assessments, if you've got larger assets, it's probably best to do them every 3 years, 5 years for smaller assets that are a bit more stable. And then if you actually share those rebuild cost assessments, which you've probably done already, and most of your audience will do every 3 years, share them with your insurance company, because they'll waive average for 3 years if you do it. Very few people are aware of that, but most insurance companies will waive average completely if you just simply share your rebuild cost assessment with your broker and your insurance company. And then you can never be subject to any average or underinsurance claims, which, as mentioned before, I mean, like you could have a £10 million asset, but you could only receive 2.5 million of funds. It can be quite, it can be the multiplier effects can be quite high on those. So that's the number one thing for property insurance to be aware of. And the second part is in terms of risk assessments. If you're doing them, again, just share them with the insurance broker or business, because it can be really, really helpful as part of that story in terms of trying to negotiate the best possible premiums. For example, if you've got a safeguarding risk assessment, very very few policyholders would share that with with a broker and insurer because they feel it's, it's private and confidential, but we all operate under NDA, so that information is quite powerful when shared with us. And any particular risk assessment that might be pointing to your business, for example, if you've got a swimming pool, if you've got a gym but you open that gym up to members of the public, or whatever quirky nature your particular business has, because every hotel group is the same, is different. They've all got their own nuances, and so those dynamic risk assessments are really important. And if you don't know how to do them, there's usually plenty of support on our side. So I'd say, to recap, be careful of average, share your risk assessments, and if you have had a rebuild cost assessment done, make sure your broker or your underwriter receives that information.
Yeah, that comes back to the trust and communication, isn't it, between the property and the broker. We have got a question here, actually, which is an interesting one, which we haven't touched on yet. What are Howden seeing as the impact of cybercrime on the insurance market? I think that's probably front of a lot of people's minds.
Yeah, I mean, it's a great question, and we obviously took part in Hotspace and had our head of cyber speak at that event, which went down very well. I think we got more questions in respect to cyber than anything else. It seems to be front of everyone's mind. I would say to everyone, just be really careful with cyber. Where we've got downward pressure on the largest parts of the premium spend for groups, property, casualty, they tend to be the highest premiums. We're certainly seeing either flat or upward pressure on cyber. Some carriers are actually stripping back some cover, and if that happens, the broker is duty bound to advise the policyholder that that's been done. So I would say, if you've received a quote last year, just ask the question: is it the same as this year? There's one area in particular that you need to be mindful of, and it's social engineering. So social engineering is where basically it's everyone's nightmare. You receive that invoice, you've got great systems of control in place to make sure you don't pay a fraudster, but it slips through the net and you end up paying a fraudster. And it's happening. Even if you have good risk controls, it can still happen. Cyber insurers are very aware of that, and that level of cyber crime, and anything to do with intellectual property, that those areas of cover should be maintained from previous years, and if they haven't been, that you should really be notified. But I would say the access to market is the same as last year. It hasn't grown. Cyber insurers are becoming more nervous. The main bit that you need to have from a risk management point of view is MFA. So certainly, wouldn't expect all of front of house to have MFA on their phones, but multi-factor identification should be on all of the head office. We should have at least 2 sign-on procedures to get into phones and laptops, and that will keep 90% of issues away. Just that, and it's normally quite a low cost and very quick to implement as well, because Microsoft has a great solution, and there's a few other providers as well that have the same.
And someone is asking, if they do pay a fraudster inadvertently, do the banks have any? Are the banks are they under any obligation to pay back? Should there be a sort of a genuine mistake?
I've never seen it.
No.
I'm sure there's a business case. Normally it's either insured and we pay, or it's not insured, and it's self-insured effectively. So the only circumstance I can see that is in a personal capacity, if you use an Amex and you've got that security around the Amex. However, from a business capacity, it's certainly, those systems of control should be in place. So for every payee on your directory, you should have systems of controls where if any of those details change, a phone number, an address, an email address, that you actually go to your physical directory or some directory that's been stored online, you phone the number that you had before, and you validate that that individual is who they say they are, and that they are making those changes. Because more often we see that very, very good emails will come through in respect to cybercrime, claiming to be an individual, will look like that individual, and that payment will be made. But unfortunately, when we do that, we're using the email address or the phone number on that particular email to validate. And I mention that because that is the most common type of
Mm.
cybercrime that we see.
Mm. Yeah, absolutely. And somebody else is asking, and I guess this has got it's how long of a piece of string. Would a sort of regular business insurance cover cybercrime as standard? I guess that's something that everybody here would know to ask and check for, but that question is being asked as well. Is that a sort of standard default position for a standard, if there is such a thing, insurance policy?
No, it's a good question because there are different types of policies, and sometimes you have what's called a package policy. So probably for single site operators to a couple. So if you should always check your main package policy. Your package will have your property, your combined. It might actually have a cyber extension. Those are very rare now. A lot because cyber is such a important cover. It tends to be separated out and excluded completely on all other lines of business. So, for example, professional indemnity will you may actually be providing advice in respect to food and beverage or whatever to another organization, or you may be running some sort of MSA or franchise operation. So you'll have a PI policy. If you look at your professional indemnity policy for errors and omissions, it will purposely exclude cyber, where before that probably would have been covered years ago. I would say most lines will exclude cyber.
Okay, all right. Are there any, we are actually at our half hour. I know we had a bit of a stilted start. Are there any other questions from any of the delegates here today? I don't think we've got anything outstanding at the moment, but we will, if anybody has any after, then we're very happy to get back to you. Was there anything else you wanted to cover, Mick, today? Is there anything I've forgotten to ask you?
No, it's just thanks for the opportunity. It was great. The main issues that we just wanted to make everyone aware of is obviously now's your opportunity this year, next year. I think it's a great time. We don't know how long the soft market will last, but certainly try and take advantage. In respect of Martyn's Law, just chat to your broker and be aware of caps and liability, because I would say most are missing that. That's quite poignant. And then in terms of risk assessments and what you should be communicating with your broker, I would say, going back to rebuild cost assessments, any risk assessments, and any of that information, just be open and honest. The broker's under NDA. There's nothing you can share that will compromise your position. It'll only enhance it. So they're the main points that we wanted to try and get across to your audience today, Jane.
Brilliant. Well, thank you very much, Mick. That was a really insightful overview on what hospitality businesses should be making sure they have considered. I know both our live listeners and those catching up later will appreciate you sharing your expertise. And thanks everyone for listening as well. We will share the gov.uk fact sheet that Mick mentioned explaining about the tiers on the terrorism prevention of premises law 2025. If you need any formal advice, then please do approach your professional advisors or come to me at a referral. And if you'd like an introduction directly to Mick and the team at Howden, then please let me know and I'll be really happy to connect you. Would you also take a look at hosper.org for other upcoming events? There are many. There's the National Hotel Marketing Conference later this week. We've got a webinar coming up about hotel telephony, and then our annual finance update with BDO, all within the next few weeks. Also on our website, you'll find recordings of our webinars and masterclasses, which are also on our YouTube channel. And today's webinar will be uploaded within the next few days as well. Thank you all for listening. Thanks again, Mick. And I look forward to seeing you all again very soon. Thank you and goodbye.